So this is US oil analysis for Tuesday 13th of February. So we saw this most recent trend to the downside. We found support slightly at the 58 a barrel mark, and we saw this upside continuation bring us through 60, trading all the way up towards that trading actually above the 60.50 level actually. Let's just see where our highs are. Highs were at 60.79, around the 60.80 level. Before we saw sell-side momentum re-enter the market and prices pull back down towards this 59.31. I think originally it is 59.31. Price came back down towards this 59.31. So we do appear to be finding a bit of support here at 59.31. So we'll see whether it does hold for another retest of 60. A break from which we look for 60.25, and a move from 60.25, we're looking for price head towards that 61.48. So potentially we have a low, and if we continue to hold this 59.31, we're looking at placing a higher low, which is somewhat bullish for price action over the short to medium term. And if we can hold the higher low, we're looking to see and successfully navigate the 60 level and hold on to the 60 level. We're looking for price head towards our 61.48. Successful break from 61.48, which is a major level marked out here in red. We're looking for price head towards our 62.54, beyond which we're looking for 63.05. I mean, between 62.54 and 63.05, we have the dynamic level of 200 period moving average, which may act as resistance and could see a retracement possibly back down towards a $62 barrel or 61.48. If, however, we do see the further breakdown in prices and we are not able to post our higher low here, momentum does not re-enter the market with any great intensity, we are looking for price head down towards that $59 a barrel mark, break from which we're looking for see 58.28. If we were to break down from 58.28, where would be the next major level? Let's have a quick look. So the levels that we are looking at below 58.28, we have 57.75, which is a very minor level, 57.12, which was a stronger level, and below which we're looking for 56.52 to the downside. Overall, on the higher time frames, we were in a trend which was upwardly, but we have pulled back quite a little bit here more recently. So if you have a look at the daily charts, get scale on here correct, as you can see, we were in an uptrend more recently, but the most recent sell-off here has been my word, it's been pretty vertical. It's been pretty vertical. It has not been a slow gradual process as in the move to the upside. It's been pretty sharp to the downside. So we've seen this inverted hammer here. I think that's the term for it. And usually there's a sign that there is going to likely be some bullish momentum re-entering the market. So we'll see how it plays out. Of course, if we trade below the low, we somewhat invalidate it in a way. And let's just see where our lows are. Our lows for this candle. Just bear with me a second. Our lows are currently at 59. So if we trade below the 59, it will somewhat invalidate the inverted hammer. But we do look poised for further upside continuation over the short term, which is somewhat counter to this most recent move from the highs in around the 65, 66, all the way down, somewhat counter. We'll see whether we do get a retracement, possibly for a setup for another short, or we'll just reshape reversal, possibly going back to our previous highs around the $66 barrel mark. And with that said, that pretty much wraps up the US oil analysis. Thanks for watching.